Hello, everybody. Welcome to your Monday Market Pulse. My name is Merlin Rothfeld. Welcome to the show. Yes, I can see I see a couple of new names, but a lot of regulars out there. To me, it is a happy Monday, Mark. Yeah, I do have a pretty sizable short position on. So yeah, of course, as Siraj and Pepe are talking about, I'm loving it. Actually, I think we got a lot more downside movement in ahead for us. So if you guys are new, hit that subscribe button, and we'll get going right away with our materials for today, which is Market Monday Pulse. And I wanted to draw this little graphic of something kind of flatlining because, I mean, things were pretty much dead today. I mean, it was just a meltdown overall. But I think the beautiful part about today's action was it wasn't like an aggressive spike and kind of inconsistencies. It felt like it was just kind of trending down all day long. So let's start off at the bottom here. I'll work our way up from the Nasdaq, which is down 4.08% as we speak right now. And I still think that there's considerable downside potential here for the Nasdaq. You notice we have not returned back to those lows we saw on February 24th, and those lows on the NQ were right around 13,000, right? Just a little higher than 13,036. Today, obviously, a huge drop down, finishing right now we're at 13,275. You know, we could very easily see this break those lows, given the amount of panic and fear that's setting in because of what's going on with Russia and Ukraine and sanctions and inflation, which I will talk a lot about today. You know, how many times have I told you guys what my basic, most fundamental definition of a downtrend is? It is lower lows and lower highs. And I made the point that this area right here, I'm going to move some boxes around, this area right here in yellow, I said if we get above that, then fine, we might still be back on our overall uptrend. But it was like, if we don't, and we start breaking these lows here in the yellow box, then all of a sudden, you know, we see a continuation of lower lows and lower highs. And we could ultimately go back through here and draw some kind of crude downtrend, looks like this. And now all of a sudden, we may be set to see a continuation of this because we broke through some key levels. Not necessarily on the Nasdaq, but in some other ones. Isn't the NQ coming into a daily demand zone? Yes, sure. And I guess the question is, how is it going to respond? So good point there. And since we're on that, let's just stay there. You know, you could look down at this low zone right here, and we could make the argument, Les and others, that we have already hit that one. And I understand there's a lot of maybe needless artwork on this screen. Let me get rid of some of this stuff. We can make the argument that this tail on the 24th already ate up whatever demand, or some of the demand at least, that might be sitting from these lows that go back into May of 2021. So, you know, it'll be interesting to see what happens if this does hold or if it just knifes right through it. Now, I think if we knife through that, we'll probably see a real quick drop down to 12.3, but this isn't even a strong demand zone at 12,300, right? It's also a retest of another demand zone that happened previously. So your freshest demand zone, at least minor one that I see, is around just under 12,000 for the Nasdaq 100. So yes, I see you guys talking about weekly and monthly demand zones. Sure. You know, we've already hit this one. Of course, it's a little bit different when you look at it on the longer time frame. We don't get as precise of a reading on it, but we've already come down into that one, and you know, we'll be testing more. But the most important part isn't necessarily the supply zone or the demand zone, right? Right now, the most important part of this picture is the trend, because we haven't really had a strong, consistent downtrend for, 2020 was the first time we had one. Now we're seeing a more pronounced, not necessarily percentage decline, but at least the number of days or weeks that the market has been selling off. Right now, we're in a sell-off of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks. Back in 2020, when we had that aggressive sell-off because of COVID, we sold off for 1, 2, 3, 4, 5, call it 5.5 weeks. So we're already almost double the duration of negativity in the marketplace. And you know, the longer you have a trend in place, the more likely it's going to take hold and continue. So I think this is a great opportunity for our markets. You know, it's something that I've been waiting for a long time, which is the rollover, right? The bend at the end. And unfortunately for anybody who's just loaded up on long positions, you know, look at that picture. This is a weekly, let's go to a monthly. Here's your monthly. I think we could all agree that this was due for a rollover. Come on, man. Goodness gracious. This is one of the most ridiculous looking charts you'll ever see. It rivals Bitcoin. So here you see this pullback. You know, we'll get rallies up. we'll get rallies up into supply, and that's your opportunity to be going short. But unless we get absolute closure from this event with Russia right now, this is just going to make everything that was going wrong in the world more amplified. We talk about inflation, talk about supply chain disruption, you talk about, which we'll look at here in a second, a lot of the commodity pieces that have just been soaring. That's not going to get fixed. And you think that that an 86% increase in the value of wheat in under 2 weeks is not going to impact global sales of cereal or any wheat product? I mean, how much is your pizza going to cost you in Italy now because they can't get their semolina wheat? It's coming from Russia. Now, all of a sudden, your $5 pizza is going to cost you $7, $8, $9. So, inflation is just going to get way worse, regardless of what constraints or things the Fed is going to try to do to help combat inflation. When you just don't have enough of the commodities utilized for our goods and services, that has a dramatic impact on prices. So I think that this is part of the scare you're seeing right now. And maybe not necessarily the scare, but the realization. It's like it's kind of like they're just all sitting around going, "Oh, it's not that bad, not that bad," and then they look at the paper spreadsheet and go, "Oh shit, all this stuff comes from Russia and Ukraine. Oh man, this could be a much more prolonged downturn." So, we focus on. Well, we never want to ignore Canada. They certainly have their place in this, but Canada's not out there fighting wars with anybody. If they did, they'd be like, they're so polite. You Canadians are so polite. Like, excuse me, would you mind if we invaded you? That's kind of a British accent. Anyway, we won't go into my horrible accents today. But yeah, that's the NASDAQ on the monthly. That's not the one that I'm actually the most excited about. I'm going to keep moving up our ladder here. Bitcoin and crypto took a drubbing. It's kind of funny because the amount that I made just on my options trade alone was offset by the losses on my crypto portfolio, which is kind of funny. The good news is I will have my crypto portfolio for a decade, so I'm not too worried about any fluctuations. But Bitcoin continuing to channel, right? Just dropping down, getting near the lower end of this range. I'm not exactly sure where we draw the box here, right? I drew the line at 30,000 because I think that that's your next logical target. But, we could stall right here at 37,000. You could also have some issues right around 35. Bottom line, nice sideways action here. So for anybody who might be doing some spread trades on options on Bitcoin futures, if there's such a thing, it might be some opportunity for you here on Bitcoin. But it was down 3.8%, and the entire segment just looked real ugly today. Now, here's the one that I'm excited about. And I think you guys remember I mentioned this the other day multiple times. I said, if we get a close below 4,200, that to me personally is a signal that we probably going to see more downside movement. And remember, we had this long bottoming tail. I'll put a line right at 4,200 so you guys can see that one. Just go here. There's 4,200 on the dot. That's that horizontal. I think that's a green colored line. Not exactly sure, but I think it's red or green. The horizontal one. We closed below that today. Right now we're at 41.88 on the S&P futures. That is a pretty negative sign. Now, technically, we still have a little bit of time for this. We have a little bit of time for it to spike up and not close below 4,200 before the futures close. But all in all, I'm pretty sure we're going to get a close down below that 4,200 mark. Now, what does that mean? That doesn't mean that all of a sudden the bottom falls out of this and it just craters. It probably means, like normal, you'll get a head fake, so it'll rip down below it maybe tomorrow and then come back above 4,200 and kind of play around with those that were going long and those that are going short, right? Just whipsawing people in and out. So here's, to me, at least from my perspective and how I'm approaching it, is I have to have a bit more resolve, take a step back and think of the bigger picture. If, in fact, all these variables that we've talked about and are going to talk more about today actually put more pressure on this market, it's not going to be a positive pressure. It will be more negative. And I'm just taking a step back, hands-off approach to the options position and letting that thing slide. And again, I think that we're going to see more downside move, and I'm going to hold those options. Remember, I also have going out to late May. So I've got February, March, April, May. I've got well over my 90 days left on options. So I don't usually like to hold. If I'm buying puts, I don't want to hold them like the last 60 days. I'd rather get rid of those because time decay is so steep. Big Eb says, sold off 20% of my Q puts today. Couldn't resist. Hey, man, you'll never go broke taking a profit, Big Eb. Congrats. Good for you on that one. It was funny because I was watching. I'm like, you know what? I'd like to sell out of some of this. Why not? But I'm not going to be greedy. It's not like I'm being greedy. I'm being a realist and saying this market has been long overdue for a correction, and all of a sudden we have this huge spectrum of global events that are all lining up to show for a much bigger downside move. So Well, hopefully I will be correct as I keep holding on these options. I haven't bought any more, but there we go. Okay, so that was your S&P. To me, this is really important that we close below 4,200 today. We'll see if that how it shapes out tomorrow. But again, I'm leaving this pattern here. We are still lockstep with it, guys. We had that rally back up. We came pretty much to this previous high, which is what a head and shoulders will do. And now we're making lower lows and lower highs. So I would not be surprised to see the S&P, at least over the next week or two, head down to 4,100, right? We had a drop of 141 points today. Dropping another 86 wouldn't be that big of a deal, and that would get us to 4,100. Now, from there, we have to evaluate, how strong are these demand zones? The only one that I really like that looks strong to me is right around 39.65. That was the last kind of big move up we had out of a rally base and a rally. So that's kind of my target here. And of course, if I've got the 119 puts that I have open right now, getting down to 39.65 would be a pretty substantial pump for this portfolio that I have at this moment in time. And I might actually sell out of a little bit, but I'm going to ultimately try to, if I can, get to this low point on my futures contract or my options if I can hold it that long. There you go. You do not have 90 days left? Yeah, I do. Yeah, I do. I got May, April, and March. So I'll be out by the end of March. I'll probably roll over. Yeah, that is kind of funny. I'll get to that one in just a second, Pepe, talking about... Okay, Drew, there you go. There you go. The way it was written, I almost thought that was a Russian. I was just about to block that one. There you go. So let's keep moving up the ladder because they all kind of look the same. Russell is still stuck in that little yellow box. I'm going to remove this bigger one here, but Russell just screaming towards those lows. Still stuck in the little range we have on the Russell, down today about 2.67%. Moving up the ladder, I've got the Dow was down 2.59%, but they all look like they are slowly rolling over, which I'm happy with. These trends usually don't last that long in bear markets. We could go back, if we have time, and look at the historical big bear markets that we've all been a part of, or most of you been a part of, like the dot-com bubble, right? There you had a sell-off that went from 2000 to about 2003. And that was a pretty strong, pronounced one. That was like, 2.5, 3 years of just nothing but down. Then you have the housing crisis, which was really 2008 to 2009. So you had like a year of sell-off. That's pretty much it. So who knows how long or how sharp or quickly this will drop. It could be a black swan type of event, and all of a sudden Russia says, hey, we're done, we'll back off, and next thing you know, it's all honky-dory again, and we start to see things get back to normal. That's definitely one option, but as you'll see here on some of these charts, to me, I think it's sticking around for a little while. So let's keep moving up this list. There's gold. Commodities doing it great again today. No surprise seeing gold up 1.79%. Here's SLV, which for me is academic at this point. It doesn't matter because, as you guys know, I sold the 2350 call options against my position. Therefore, anything above 2350, I don't get a penny of it. But I collected some really nice premium on that one, so I am very happy with this one. You guys notice the yellow box here. There's a lot of people out there, and of course I like to jab at one in particular who has a lot of, this is what I did, this is what I did, this is what I did, and it's all after the fact. But you guys have been watching this program for quite some time, and we've had this yellow box on for a long time. It's not like I drew it out. And basically, this options trade, I'd been selling I sold the 21s when we were up near these highs and got filled on the 21s, finally dipped down a little bit, but I've just been playing that range. And so I was fine selling the calls at 2350 because I actually expected there to be a little bit of a sell-off to the south side here. So no big pullback yet. And the way things are going with gold, silver, precious metals, and Russia, it would not surprise me at all to see this thing rally up to like 25, 26 bucks in no time at all. So I may look at selling some puts on this one if it starts to show a little bit of weakness, because I wouldn't mind getting back into silver, but I want to let my options expire first, and then I'll be out of that position and start all over again. And now, as we see from Pepe, he says last week's poll numbers were hit today. I think, was it 120? I think we said, is oil going to hit 120 was our poll, and 75% of you said yes, that we're going to hit 120 on crude oil this week. Pretty sure most of you would not have said that we would hit 130 on Monday. Like crazy. crazy to see that big spike to the upside today. For me, this is a challenging one because what does it do to the technical side? When you have a big blowout event like this, and it's going to take me a second because that stupid print from April of 2020 skews up everything. But remember, we were talking about this 114 level, and we breached that one, and now it's like, well, where are we headed? And you can see I've got a little yellow box over here. I'm going to put a horizontal line. Let's just move some of these lines so I can see where we're at. That was our peak today. And where did that line up with on this chart? It actually broke above this area of supply. This was my next target, was about 125, 126 for the S&P 500, and we knifed right through that. So, the way things are going, we could put a poll up that says, how many think we're going to get to 150 this week? I mean, it's moving that quick. And when we look at some of the facts and figures here, you'll understand a little bit more of why this is the case. Surprising that it's impacting the U.S. as much as it is, in my opinion. But he called the bottom in 2000. Oh, God. You know how many times he called the bottom? It's kind of like me saying I called the top. Yeah, I've said that this is the top for the market a few times over the years, but I'm not going to gloat about the one time that I was right. It's kind of funny. People do that all the time. I'm right on this one so far. Who cares if I called the top or I called the bottom? Bottom line is, does my account grow? And that's the most important part. Okay, so crude oil obviously is the topic du jour, and a lot of people asking. Let me scroll back because I think Margaret was asking something on crude oil. Where was that, Margaret? I'm going back. Hold on. Curious, do you like buying puts versus shorting the futures contracts? I do. I don't know why. I've just kind of really been much more into the option side of thing. I don't really have a reason, Lisa, for that. I just tend to load up on puts or calls, depending. Mostly it's going to be put side. Let's see. Where was that question from Margaret? I'm going way back up here. Sorry, Margaret. I think I may have missed it. Oh, there we go. Look at the monthly supply zone on crude oil. Will this cause trouble for the very strong uptrend? So here's our weekly. Here's our monthly. I mean, really, it's all the same, right? It doesn't matter whether we look at the daily, weekly, or monthly. It's clear that the next big supply level is 145 to 150. Now, will that cause problems? I guess define problems. I think even though you have a level at 145 that looks attractive from a short perspective, you've got to look at the overall situation. And am I going to be out there selling puts? Or sorry, buying puts as we come into the 145 mark? Probably not. I just think there's way too much uncertainty, and I think this conflict's going to continue to let oil run. And Margaret, you mentioned the other day, like buy some calls on crude oil. Sure, if you think it's going to keep going, to me that's a low cost way to capitalize on these moves. However, I haven't looked at them, but I think the premium for call options right now for crude oil are probably pretty damn high. So you might be able to make a little bit more money selling some options on it, but it's just too risky for me on oil. So that's how my take is. If I buy wheat, then it goes to lock limit. Can I still sell it, or do I need to wait until it starts moving again? So if you are in a commodity, way to throw me a curveball, Todd. Not a curveball, but all of a sudden I'm just squirrel. I'll just run with questions. Then the beauty of this show sometimes. So here's wheat, and let's go to a daily because this one has been just a marvel of lock limits. I mean, look at this chart, guys. Lock limit, lock limit, lock limit. And again, if you don't know what lock limit is, there's circuit breakers for pretty much every futures and commodity product out there that if it hits a certain level, it will just stop trading. Now you notice here, there's a little dash mark, which means basically this wheat opened today and just opened up at the highest price and just stuck there. Because really, like everyone's trying to buy wheat, but they can't. Because there's nobody selling it, right? And granted, I think China, Russia is like 20% of the world's wheat population. When you have this lock limit up, they're extremely dangerous. Extremely dangerous. This is probably one of the most dangerous things you could be doing right now. Is if you're looking at wheat futures and saying, okay, I'll buy it. First off, you're not going to be able to buy it because there's nobody out there selling it. Anybody who's holding wheat long right now is not selling because it's just like they know it's going to go higher. So how do you capitalize on this? Well, if you're crazy, you go out there and you could actually sell wheat because you'll get filled right away. You see right now it's at 129.40. All right, that's this dash mark up here. I know it's kind of hard to see. Let me put a yellow box just so the viewers understand. It's not even a candle. It's just that little dash mark in the middle of that screen right there, in the middle of that yellow box. That's what happened to wheat today. It gapped up, stuck there, and really hasn't traded because nobody's selling it. Now, if you had cojones of platinum or palladium, you could go out to the market and you could try to sell wheat, right? You go short on wheat because everyone's trying to buy it right now. That's what's locking it to the ceiling, and it's not dropping. So there's people who will buy. If you sold wheat right now, they would buy it from you. But how dangerous is this? Notice what's happened every day. The last 6 days in a row. 1, 2, 3, 4, 5, 6 days in a row. It's lock limit up. What's the probability that tomorrow is going to be... Hey, here, hold on. Let me just... Because I have been enjoying doing these polls. Will... Sorry, I'm just typing in the question to the chat here so I can see this poll. So I'm sending out a poll to you guys right now. Let me know what you think. Granted, 6 days in a row, we've lock limited up on wheat, right? And again, it's just because you have one of the largest producers of wheat in the world is basically going offline with tariffs and sanctions and all this, not tariffs, but sanctions. So, where is this going to stop? If we look at it a longer term time frame here, let's go to a monthly. We're not the highest the wheat has ever been. We had it back in 2007, 2008. We were up around 134.7. And right now we're at 129.4. So it's crazy how much it has moved. And most of you, I see, I'm going to let it stay there for a second, but I can see most of you are saying, yeah, it's going to lock limit up tomorrow. You just got to go with the probability. The odds are pretty damn good. It's going to lock limit up tomorrow. So, how do you play it? I personally don't. I think you don't. Right? If you were to try to sell wheat. So here's the problem that you have. And some of you are probably thinking, well, wait a minute. It shot up so much. If I was to sell a wheat futures contract, what's the worst thing that could happen? I'll let you guys answer that one. What is the worst? If you sold short one wheat contract right now, what is the absolute worst thing that could happen to you? What do you guys think it is? I'll let you give a second for you guys to type in there. Because it's one of those things that's absolutely frightening. It's like really frightening. It could be something that completely destroys your trading account and there's nothing that you can do about it. So you're short, right? Let's say you sold one wheat futures contract. And I'll just put a number on here and we'll just go put the little horizontal line. And let's say we did it today, right? So it opened up. We sold one at $12.95. Somebody bought it instantly. Well, Brandon, you say what's the worst thing that can happen, right? Liquidation. That's what you would think is the worst. It's not. Because they can't liquidate you. As Lisa says, you can't get out. It's physically impossible for you to get out. It's unlimited stock. It's unlimited loss. So let's say you sold it at $12.95 and you're thinking, dude, this thing was at $7.50 a couple weeks ago. It's up almost 100%. It's going to come down. Tomorrow it opens up, lock limit up again. And let's say that you had minimal margin in here. So you've used all your money and you have sold one wheat and you're all leveraged out. Normally what will happen is the market moves up. Your broker will say, hey, you're margined out. You're past your margin. We're going to close it automatically for you, right? So what do they do to close your position? They buy back that futures contract and you're flat. But there's nobody selling it. So they were just going to sit there and do a market buy order, and it's just going to keep on going to the next lock limit where nobody is selling. So it could go lock limit up day after day after day. If you were short the last 2 days, you could not get out. You see these green candles here? These actually showed you that the market opened up and rallied. So there was some trading going on these green candles. But these dash marks, there's no trading. It lock limited up. And there is nothing you can do to cover your short. You can't buy from anybody. There are no sellers, right? So to me, that is the scariest thing that could happen to you because it literally could go up day after day after day. And ultimately, when you finally do get filled and out of that position, you could owe your broker way more than the amount of money that you had in your account, right? So let's say you put up, I don't know what the margin is for wheat, but let's say you put up a $5,000 margin. Even if you set a stop loss, you could be out of this trade when it finally doesn't lock limit up. And all of a sudden, $50,000 or $100,000 because of you were forced to close that position. So to me, don't be doing it. Drew, got to be a good feeling to sit in a long position right now? Hell yeah, if you bought wheat 2 weeks ago, this is like the goose that lays the golden egg. It's just paying, it's like walking in the strip club with $100 bills. It's making it rain right now. Love it. And hence the higher margin requirement for most futures brokers. Absolutely. Perfectly said, Margaret, because if I'm a futures broker and I know that this is coming, right? Futures brokers aren't dumb. They know what the potential, the outlook is for different commodities, especially with what's going on with Russia. And they know wheat is going to be impacted by this. So they should have done it earlier, in my opinion, because right now I know there's traders out there who are like, wheat's got it. It can't move this much. Remember, markets can remain irrational longer than you can remain solvent. Do I get a silo full of wheat? No, it's not. I don't believe that this is. I think that this is cash settled. That's actually a good question, Tom. I'm not sure. Now you're really threw a monkey wrench in the plans. Let me just really quickly look at CME Group, and I want to bring up. Oops, I went to the wrong one. I'm going to go to CME Group. We'll go market. Let's go to wheat. It's funny. It should be on the top ones, but we'll go wheat, and we'll see if it's cash settled. I think it's cash settled, but I'm not sure. I've never traded wheat. It's not definitely not my area of expertise. Wheat futures. Oh boy. Oh, come on. Just make this easy for me. Markets. I'm surprised it's not right there. Let's go all products. There we go. So there's 10-year. Oh, come on. Corn, wheat. I'll get there eventually. I just got to scroll down here and find it. West Texas Intermediate. There you go. Wheat futures. This is the KW. I need the ZA. I need the ZW. Well, let me see if I can do this on another time. I'm going to waste our time here. But it's an interesting point you make, Tom, because if a security is cash settled, you never have to worry about delivery. Some commodities are, and if you are in a position where it goes past contract, when it goes to expiration, you still can't get out, that is a black swan event for somebody out there that could theoretically take delivery, like crude oil, right? So crude oil would be deliverable, which is why most of them are going to close you out early on that one. So ICE cash settled U.S. wheat futures contract to cash. Thank you very much, Yaza. I wasn't sure on that one, but that makes it at least safer, right? Because if it's cash settled, it's just going to be cash. Whereas if you were through expiration because you couldn't get out because of lock limit, that's scary because now you're going to be forced to take delivery. Okay. You guys got me off on a tangent there, but that was a good tangent. I like that one. So, let me go into some of the things I wanted to prepare today, and I'll get to Margaret. I saw your question that came in. I wanted to just show you a couple of slides here to look at, the top exports for Russia. And I think that this is really important for all of us because we're under the impression that this is going to impact us significantly for inflation. So their top exports we know is fuels and oil. It was interesting to see the commodities not specified. It's like they're kind of being sneaky about that. Precious stones and metals and iron and steel are way down here near the bottom. So, okay, we know that fuels and oil, the fuel stuff doesn't really impact us as much as some other countries, and you'll see here in a second. So here's oil and gas. So you look at where they send most of their oil and gas. China is hands down their number one. Interesting, like the Netherlands is just completely reliant on Russian oil. Germany, not so much, but you see Germany, South Korea, and Poland are on the list as definitely consumers, but not as reliant as China and the Netherlands. So these two here, and it's not interesting, it's just expected to see that China, really hasn't said much, and the things they have said kind of puts them as siding with Russia in this altercation, this difference of opinions with regards to Ukraine and Russia. So that is interesting to me. You don't see U.S. on here, right? It's not like it's a major issue for the U.S., but what do you think this is going to do to like Netherlands fuel prices or Germany or Poland? Now, this is going to potentially drive up all of crude oil prices because now the Netherlands, Germany, Poland, South Korea are going to need to start to look to get their oil and gas from somewhere else until this is resolved. Now, here's one I thought was interesting as well. You have iron. So Turkey, Taiwan are Turkey is by far the biggest consumer of Russia's iron ore. but really not a lot of other major ones. You got Taiwan, Belarus, Kazakhstan. China is down there, but not a huge consumer of it. Here's one I thought was interesting as well. Wood. So China clearly, because of the wood and because of the oil and gas, is really beholden to Russia. I mean, they are so much farther above in the wood consumption, which is interesting because they got plenty of forests in China, but apparently, they're just taking all from Russia while they can. Finland, Japan, Uzbekistan, and Germany down here way near the bottom. Okay. I thought this was interesting as well. Gold, gems, platinum, palladium. A huge bulk of what Russia exports goes to the UK. This one was really surprising to me. If you look at how much they are above everybody else. This is the first chart we've actually seen the United States on with regards to gold, gems, platinum, and palladium. Now, I did a little bit of research because I think it was Margaret was mentioning, how much different metals come from Russia. Russia is number 3 in the world for palladium, right? At least for the stats I saw. So they were number 3 in the world, pulling out 250,000 metric tons per year. The U.S. was only doing 18,000 metric tons. So they're a factor of 12 or 13 times the amount of palladium in Russia than we are here in the U.S. So clearly that's one of the reasons we saw that big spike. The other one, which I think you mentioned this one also, Margaret, was, and I was kind of dumbfounded at this, was that 90% of neon, which is used for lasers and a ton of other things, is made, or is not manufactured, I guess, is produced in China or in Russia and the Ukraine. That is an incredible 90%. That is a absolute monopoly for those two countries, Russia and Ukraine. 90% of the neon coming from there. And again, we had chip shortages, right? But now all of a sudden, if it's using some sort of laser technology, you might have neon shortages where Russia is saying, hey, you're going to mess with us? We're not going to send any neon to you. And this could put some problems on some of the services we use. But going forward, who knows how that's going to go. What else was an interesting one? Oh, with all of the exports, it was interesting to see that 49% of Russia's exports go to Europe. So if you look at the sanctions that we put on, and of course we want the rest of the world to get involved with this, sanction and shutdown and refusal of goods and services to Russia, who's going to be hurt more, Europe or the United States? The European Union is this is not going to be good for anybody that's in this room living in Europe. This could really start to make your costs soar. I mean, you thought inflation was bad before. Now all of a sudden your oil and gas prices are going to soar. You got precious metals are going to soar because of the neon shortage. Electronics could start to soar. So, this is a catalyst that no central bank wanted at all because this could really spike inflation numbers going forward. Transient my ass. This is no longer transient. 42%. So 49.3 went to Europe. 42.2% of Russia's exports went to Asia, China. And then 3.7 went to the U.S. So it's kind of interesting, we hear so much about the sanctions. It's probably easy for our current administration or for the American administration, regardless of which one it is, to look at it and go, yeah, we'll sanction Russia. Because it's not like kicking us in the teeth. But you look at what's happening to, China, they're being on Russia's side because it's China. But the European Union, to me, really has it's a good one, Doug. The neon Nazis. The European Union, to me, is really going to get hit hard. So, you look at these inflation numbers. Oh, it's 7.5%. Oh, it's going to be 8%. You give it another few months before all of these sanctions hit the bottom line for manufacturers and companies around the world. I mean, you could all of a sudden be looking at 12, 13% inflation in just a few months. I know it sounds crazy. I think they could spike that much. But look at, if wheat, which this chart right here should tell you that your cost of goods, and this is not like a monthly chart. This is a daily, right? So we have moved up in the last, I'll do it just from this little low right here. So give us some time, right? Going to where we are right now, that has been 22 days, 75% increase. 22 days, 75% increase in the cost of wheat, which is normally a cheap item, right? Well, you just name product after product after product that includes wheat in it, and that's all going to surge. And it's not just that. You can look at other commodities as well. We talked about corn the other day. It's also seen a pretty nice move up, albeit not as significant as wheat. But I think that it just starts to get bigger and bigger. Oh, Christian said, hello, recession. You know what I put together? Let me just show you guys this. I'll have to add it in because I did it on a different computer. But if we take the, this is going to be 10, this is going to be interesting. Let's go 10, I think it's the US 10 year. Is it 10YR? 10Y. And then I subtract the US 02Y. This is what's going to show me the inverted yield curve. Right, so we're going to hit enter, and I hope that this worked. Okay, this is one I think that a lot of you should find really interesting. I'm going to go a weekly here, and I'm going to put a line right at 0. Right, so historically, when we go inverted on the yield curve, it has an extremely high probability of leading to a recession. And thank you so much for putting that one in there, Christian. Check this out. Here is going back to, I don't know, pick your year. Here's to the 80s, right? The late 80s. You can see anytime we go below this red line, that means that the 10-year is paying less than the 2-year, right? Because normally, your 10-year should be earning you more yield because you are committing your currency to be locked up for 10 years, so you should be make a little bit more than that. Notice what's happened over the past couple of months. This has been an aggressive sell-off from where the 10-year is paying you significantly more than the 2. So all of a sudden, they're pretty much flat. And we could be headed, the way this trend is looking right now, it looks to me like we're going to be headed towards an inverted yield curve just because the future is so uncertain. We get down below this one, that is a sign that we are in fact in a recession. Did I pick a good time to learn how to trade futures? Well, personally, Joe, I think any time is a good time to learn how to trade futures, right? Learning how to trade is awesome. I think what you should be learning, making sure you learn, is the ability to go short and betting that things are going to go down. I know it sounds anti-patriotic, but when you look at a chart of this markets where it has just gone absolutely parabolic for so long due to the Fed and much more. Here's your S&P. Hello? Give me my S&P. That's weird. It doesn't want to pull up my S&P right now. Let's go to, I don't know, Nasdaq. That is awkward. Let's go SPY then. Okay, let me get that one out of the way. You know, you look at a chart like that, and to really put it in perspective, you have to understand that this sell-off right here, this is. You know, I've showed this to you guys before, and I know it's probably redundant, but hey, we'll just deal with it. This first yellow box, that's in textbooks. That is in financial textbooks around the world called the dot-com bubble in that first one. And this right here was the apocalyptic financial crisis where everyone's like, oh my God, the whole world's going to die. It was just chaos. And those look like nothing. Anthills, just little blips on the radar compared to the potential for this next big move. And, you know, we'll see how it all pans out. Hopefully that we, as a collective group, I know I am positioning myself a little bit more bearish at the moment. Hopefully when this does, if and when it does continue to drop, you know, you're not left holding the bag. And you're not sitting there in your retirement accounts going, yeah, it'll all come back next week. Well, it could be down for a long time. How far down was the ghost SPY trade from January? Are you talking about which ghost SPY trade? You're talking this from 2022, right? Because you have this this drawdown here, but I don't know if I would call that a ghost SPY trade. That was an actual SPY trade. Level of the chart follows all the laws. Well, you know, it's all about, again, I've mentioned this before, trading to me is not about having the best strategy. It's not about having the best calls or picks. To me, it's mostly about making sure that you're on the right direction of the big trends. That's where the big money happens. And if you're wrong, you get the hell out, right? So right now, I'm short. Everybody, you all know that. I'm short in a big way. I've got QID, plus I got a ton of puts on the S&P and the Russell. But I'm moving my levels down. So if it does spike, I'll get out and I'll take some profit. But you know, I'm looking for the bigger trend. And it's kind of funny. It's like you, as a baseball player, I'm a small guy, so I only hit one home run in my my Little League baseball career. And it was an inside the park home run because I was really fast. But I think as a trader, I'm always trying to hit singles. Just get on base, chip away, and then maybe I'll get that double or that triple or, an inside the park home run. But I'm not trying to get the inside the park home run. It's just you got to make it happen. And I think that this trade that I have on right now, right now as of today, it's collectively on the entire position, it's a 96% gain on that trade. But I'm still thinking it could be much bigger. I'm still thinking I don't even think we've really begun to collapse yet in our market. I think this is just a rollover. I think this is just a rollover right now. If you look at the overall move, and remember, I do have our list of what people were forecasting the markets to do this year. All right, remember, mine was we're going to get down to 20% and then bounce off of it. Well, we are right now down about 12.6 on the SPY. 20% would bring us all the way down to, I think that's this line right here, yep. Bring me down to about 385, which is exactly where oh, yeah, you're right. Sorry, I'm digressing. Yes, that ghost trade, that was a weird print that we talked about on the show. And it doesn't show on this platform anymore, but it was right here. It was print from 124.22. So, yeah, I'm glad we actually have that one on here. The line is gone, but how far down would that be off the peak? That's going to be a lot. That's a 24% slide. Which, could it get there? Absolutely. I hope it happens while I'm in a massive short position. Yep. Yeah, I got you, VBB. I forgot about that one. But that's why I wrote it out, because it was such an anomaly. I wanted to put it on the chart. I literally have this line here. Print from 124.22. So thank you. No, I don't think we've seen the Joe Public panic sell yet. I think right now, I think the U.S. feels pretty comfortable and confident and safe. I mean, and I really hope nothing stupid happens with Putin. But, when you corner an animal, that's when they tend to bite, and that's when they get real dangerous. And I think that the amount of sanctions and cutoffs they've done to Russia, that animal's cornered right now. So hopefully we can resolve this kind of peacefully. What strike are my puts? I have the 385 SPYs. I'm going to look at the price chart. The 385 SPYs. Let's see, IWM. And I have the 165s on the Russell. I mean, I'm way out, which is fine, right? And there's the reason for that is generally when I bought those options, they were cheap. A lot of the times when you buy them and they're expensive, by the time it gets to that strike or starts to move towards it, the options become so expensive that the spreads get real wide and there tends to be a lack of liquidity at those prices. So I wanted something that when I purchase it is cheap, but as it gets closer to being in the money is going to have a higher value as opposed to an astronomical value. Average head and shoulder prints 22% after neckline broken, so makes sense. Yeah, well, I was with my analysis here on the S&P. I'm just basically taking the distance from the head to the neckline, right? So go from there down to here. So let me turn this piece off. That's the neckline in my opinion. We can beg to differ, but for now that's my opinion. And let me take off the extend. So this distance right here should be how much it falls, in theory, if you believe all that stuff. Which I put it right here when we break, and that's pretty much where my target is right now. Right? So there you go. Oh, Pepe does not have those dreams, okay? That's more of a nightmare. Let's not call that a dream. That's a nightmare. There will be no nukes hitting. It's funny. I was talking to someone the other day, and I was like, if I hear that there's one launching anywhere near California, you'll see me maxing out my truck, probably doing about 130 miles an hour, and I'm not stopping for any cops, straight into the Arizona desert, because I'm not really. You look at the coastal areas. If you're stupid and like Putin and going to go after the real heavily populated areas, you're looking at New York, you're looking at Boston, you're looking at San Francisco, you're looking at L.A. I have heard people saying that they're hearing fighter jets fly around, and it would not surprise me to see them running tactical missions just to see if they could shoot these things down as they're coming over. But let's hope it doesn't get to that. That was crazy. We didn't even talk about crypto. All right, how much time we got, Margaret? So Margaret asked me a question. Let's see, did I get everything I want to get out of the way? Hold on a second. Okay, let me go back up to Margaret's question. So, there it is. Margaret says, please comment on this headline. Coinbase says it's blocking 25,000 Russian-linked crypto addresses. Isn't this bad for the decentralized theory? Yes, it is bad for the decentralized theory. Remember, Coinbase is not decentralized. That's the challenge of keeping your money centralized. Now, I've mentioned this before. I have this is Nano Ledger S. These are little storage devices. This is let's just say a decentralized way to go. So I can at least keep my assets. So Coinbase can do a couple things. They can, number one, they can freeze anybody's account that they want at any moment. They can also block specific addresses. So this Nano Ledger that I have here has a specific address tied to it. And if they knew that I was some kind of Russian hacker or oligarch and I got, $100 million of the Bitcoin on here, they can see where those payments have gone and they could potentially block those addresses. Now, what they'll do is they're probably not targeting nano ledgers or cold storage devices. They're targeting crypto exchanges from Russia that have a defined Bitcoin or defined address. So if there's an exchange in Russia that's trading cryptocurrencies, it will be known what that Bitcoin address is. So all Coinbase is saying is, hey, we're not going to do any transactions from that address, right? Is it bad for centralization? Yes. Is it bad for the concept of decentralization? It still shows you that there's ways that they can prevent transactions from happening. I just can't go out through Coinbase. But if I'm one of these Russian oligarchs, could I go to some other multi-billionaire and be like, hey, I'll just do a cash deal with you. This doesn't need to go to an exchange, and I will sell you some Bitcoin and we'll do cash. So there's ways around it, but yes, it does speak volumes to the power of centralized entities and their ability to say, I'm going to do business with you or I'm not, right? And this is just a challenge that we're going to face going forward with it, which is why, I'm a big fan of keeping your cryptos in your possession unless you're trying to earn yield on them, which most of mine is now sitting there earning yield. How many Bitcoins do you have that you need so many nano ledgers? So nano ledgers, these old ones, these nano ledger X's, you can only hold 3 cryptocurrencies on it. So like this one has Ripple, Ethereum, and Tron on it. This one has Bitcoin, Bitcoin Gold, Litecoin, and Polkadot on it. So that's the old technology. I actually have a new one right here. This is the Nano Ledger X, which can hold a lot more. So I'm going to be migrating over to Nano Ledger X here. My Nano Ledger is protected with concrete and AR-15s. Wow, nice. I gotta find out where you're keeping yours. I'll put mine in there too. But yeah, it is kind of crazy, Margaret, that they can do that. Remember, this is the same thing that the Canadian government told the exchanges to do with regards to the convoy and the whole trucker situation going on in Canada. So it doesn't mean that you can always have access. You just have to find alternative ways. So if I'm Russian, all right, I'm not doing anything with Coinbase because you've already told me that you're working with regulators to make this to block me. Therefore, I'll go somewhere else with my business. And there'll always be somebody else to take that business. Always. Let's see. What else do we have here? How many Bitcoins? I've got a few. I know. Don't make fun of me. I'm an OG, right? This is an OG crypto storage. There's a lot of control being levied against crypto. Kind of defeats the purpose of being in crypto. Yes and no. Remember, we're still in the infancy with regards to crypto. So at some point, I believe the DEXs, decentralized exchanges, will have much greater flexibility with what they can and cannot do. And you'll see more people gravitate towards those types of exchanges. So I do a lot on decentralized exchanges, trying to earn extra income. I mean, some of the yields I'm getting on one, I'm getting 62% rate of return on a DEX for staking specific cryptocurrencies. So crypto good for money laundering? Yeah, sure. So is art. Art's good for money laundering. There's a lot of ways to launder money. Not that I am laundering any money or have any need to. But if you've ever seen the movie Ozarks or the TV show Ozarks, check that one out. There's always ways to launder money, right? There's always a way. It just, in some cases, it could be easier with crypto if you know what you're doing. There you go. All right, let me get to the end here because I want to wrap up. It's Monday. I got this huge list of things to do, and I don't even know what I have to do. There's nothing really for the earnings side of things, but there is some economic announcements. Here's what's happening for tomorrow. A lot of stuff for Europe. You got the Italian retail sales numbers. They have some GDP as well. You can see for the United States, we have IBD tip economic optimism, final wholesale inventories, and our trade balance numbers, which should be interesting. For Japan, you've got GDP numbers, and then, you have inflation numbers for China down there near the bottom, if you trust any of that stuff and going forward. Yes, Ozarks was a crazy show. Merlin, would you feel more comfortable going offshore with your crypto? No. No, I'm comfortable keeping my crypto on predominantly U.S. exchanges because I have some recourse. I can go to these exchanges, and plus I feel like there has been some regulation of those as businesses, and I have some legal rights. Whereas if I'm in, KuCoin or, BitThumb or Binance.com, I don't know if I could actually access those accounts, and I might have some problems there. So I like to keep mine on exchanges, predominantly in the U.S. That said, I do have some sitting in Switzerland right now. I do have some in the Singapore, moving it around. The stuff that I put on this thumb drive, most of it is going to be, well, at least my Bitcoin. I have taken more than I initially invested in all crypto. So I took every penny that I wrote down in a spreadsheet that I've been buying with crypto over the years, and I have that sitting in Bitcoin on that thumb drive in value, and then everything else I'm basically just doing fairly aggressive in some senses, but trying to grow that as quickly as possible while the wild, wild west is still there for crypto. Because I think at some point regulation will calm the volatility. We won't be getting these 1,000% rates of return that we have seen in some cryptos, and I'm not so upset about that. It's just I want to be hopefully capitalizing on a lot of it while it's there. Do you still believe Cardano will have a breakout year in 2020? Seems like it's getting canceled. Yeah. I don't think it'll be 2020 is like its breakout year. I think with Cardano, you have to think longer term. I think you have to look like 5 years and say, I know this will be something at some point. I think that they're moving slowly, which is kind of frustrating to me personally because I do have some Cardano. I got a good amount of Cardano, and watching it just drift down is really frustrating. So long haul, I think you'll be fine, but there's a lot of mistakes I think some of these other smart contract platforms are going to make because they're rushing to get to market and they're going to stumble along the way. Cardano, yeah, it seems like it's dead, but that's just the price, right? This is a topic we're going to talk about in the CIL tomorrow night. There's some really prominent developers who've walked away from projects, and part of the frustration is because price went from like $1 to $30 and now went back to $1.50, everyone says it's a failed project. I was like, no, that was speculators pumping up a price and then crashing it back down. It's the long-term vision, right? In let's say 1999, did Amazon go from 5 cents to 15 bucks and back down to a nickel and everyone said, oh, it's dead? No, it didn't have that type of pop. Crypto has it across the board as speculators are jumping in. Personally, I like to see the ones that really have huge spikes and then come ripping back down to potentially some buying opportunities for me if I believe the project, right? I'm not buying shitcoin or crap like that or Dogecoin or anything like that. I'm trying to find ones that are really... I am still a fan of Polkadot, although it's dropped... My level went from like a 9 on a scale of 1 to 10 to probably about a 7 with regards to like they're not pushing enough in my opinion. Are crypto charts and bank core strategy? Yes, to some extent. So I don't think you have the institutions involved yet. I don't think you have the real big money that makes the real predictable moves. You have whales out there, but those are generally people who started the projects. So it's a little bit different, but every day you hear about JP Morgan or Goldman Sachs or Fidelity coming on board and doing more with crypto. That ushers in those elements which give us the big footprints of institutions, and to me, then it'll start to be much easier with regards to supply and demand trading strategy. All right, I think that's going to do it for me for today. I didn't think I was going to go for an hour today, but goodness, that time flies when you're having fun and you had a good trading day. So anyway, be careful out there, everybody. I think it's going to be a wild one tomorrow as well. I don't see this volatility stopping at any point. You're watching right now, the S&P is bouncing up a little bit, but we are still below that 4,200 mark on the S&P as we stand. So if you guys have comments, questions, feedback, do me a favor, put those down below the YouTube video. I didn't do a grovel or begging for subscribers as most people do on their channels, but if you guys are interested and want to, I know most of you are regulars here, but there are some new people, hit that subscribe button so you're alerted when we do the show pretty much every day, Monday through Friday at 2 p.m. Pacific time, and time permitting, I might start putting some other videos up there in the future. So thank you guys so much. Hope I will see you all mañana. No guest tomorrow. Maybe I'll have a guest. I'm not sure, but I'll try to get some more guests scheduled because I think you guys liked that last week. Take care, everybody. See you tomorrow.